Let's just ask Mark, I mean, just looking at the reaction on the bond market and, these tumbling yields here too. I mean, it's such a marked difference between this time last week till now. And, of course, this is all having huge implications on what people are calling on monetary policy, naturally, too.
Yeah, I mean, a big part of this is a change in confidence. The fact that you've had a couple of banks had to be taken over has really undermined people's confidence in the financial sector. We've been told that this is not a contagion risk. There are lots of people out there telling us there's nothing to worry about. These are isolated cases. But it's not easy to convince all investors that everything is well. Somehow, the Silicon Valley Bank went through the stress testing of the Federal Reserve, and it was not noticed, even though the balance sheet clearly had these risks in it at the end of last year. So somebody missed that. And that is not good for confidence overall in the sector. That's why you're having these crazy moves in the bond market, because people see that as being the most defensive place to go. Plus, of course, because we had the inverted yield curve, there was a lot of people short, especially of the 2-year. So not only do they have to cover their shorts, they then are probably going long of the 2-year sector as well. So it's a double whammy in that respect. If it's proved that it really is an isolated case, some order will be restored, calm will come back. But for the moment, people are not sure. And when people are very, very uncertain, they will go to the most defensive place, and that's the short end of the bond curve.
Well, Mark, let me dive in here because, the European Central Bank, we had a story today about how, the bets are shifting and now less is expected from them. I can talk about those details in a minute, but from you, I want to know, what do you see in European credit markets? What do you see in the kind of securities that would indicate whether or not there is some underlying risk they have, a very different financial system from the U.S. in many ways, that would indicate that the ECB should consider that in making this decision?
It's very unlikely that this week's events will change the course of the ECB, and that's not necessarily a good guide as to what's going on in the future. Central banks, in a way, are a little bit backward-looking, and they would have had lots of information on what has happened so far, and they've probably made their decision. They're probably going to proceed with a 50 basis points hike. Where people are getting nervous about Europe is that we saw in the 2008 crisis that European banks, in some cases, were more leveraged than American banks. We thought American banks were pretty aggressive. Turned out some of the European banks were even more aggressive in their risk-taking. And that's why you've seen some of the big bank stocks get sold off heavily this week. So people are still unsure. On top of all of that, there are one or two specific European banks who already were under some pressure because they've been losing money in various places over the past couple of years anyway. So there's a bit of a cloud over the whole European banking sector. And so far, we haven't really heard any reassuring noises from the regulators to tell us, don't worry, there's nothing wrong there, because they're probably not sure themselves. So the banking system, hopefully, is on much better footing than it was in 2008. But there's a lot of investors who don't want to risk their money until they've seen somebody else put their money in first.
Well, I guess what I'd like to just add on to what you're saying, Mark, is that if there's been these sort of doubts about the banking system, and the ECB up until now has been pushing for 50 basis point hikes and winning, and if they still have super high inflation, and again, and there's some doubts about their banking system, it still seems like something that at this point, on this day, 2 days before they meet, that this is not something that is going to slow them down, and they're going to stick to what they've said. They're going to look at what's going on, and then they're going to decide whether or not to do 50.
I would just say that history is littered with central banks making the last hike being the wrong one. So many times throughout the last 30 years, we've seen the Fed, the European Central Bank, other central banks making a hike and then having to reverse it soon afterwards.